to Grayscale Bitcoin Trust, GBTC, could be looking to unwind as much as 20% of their positions after continually getting rejected by the SEC for a spot Bitcoin ETF. Yes, as you know, Grayscale have been trying for years to get a spot ETF approved by the SEC, but have continually been blocked. They've appealed this, trying to sue the SEC, but now, given very little hope ahead, we're now seeing reports that Grayscale could be looking to explore how to unwind 20% of investor capital if they continually get blocked by the SEC. Now, why this is particularly interesting, we've covered this before in previous videos, is because a futures ETF has been accepted, right? We've seen numerous futures ETFs being accepted. You can see the ProShares Bitcoin ETF was accepted last year. That's a futures ETF with $575 million of assets. You've got the Valkyrie one, which is about 20 million. You've got the Van Eck one, which is 21 million. But for whatever reason, all the spot ETFs have been rejected. And it's not just Grayscale, right? Wisdom Tree had an application rejected. Fidelity have had applications rejected. Van Eck have had applications rejected for a spot ETF. Now, the SEC's argument has always been, well, they're very different things with different risks in terms of fraud and manipulation. Now, if you take a look at it, what they're saying is, and this is what SEC and obviously Gary Gensler are saying, is that the Bitcoin futures ETF is monitored closely by the CME, the Chicago Mercantile Exchange. Whereas on our side, the spot market is not as well regulated, okay? So they're saying they don't have oversight of it. Now, this is part of the problem. So if you look at this, the SEC has remained consistent in its belief that while a futures-based Bitcoin ETF is permissible, a spot-based one is not, because there was a risk of fraud and manipulation. Now, what Grayscale have been saying is, well, that's a bit ludicrous, because if you look at the data, we're tracking the same as what the futures index is tracking. Okay, so what they're saying is we propose to track the CoinDesk Bitcoin price index. So our ETF would have to track this price index. And if you follow that, had we been approved, we would track exactly the same as your futures index on the CME. Right? So it's exactly the same. So you've got this argument going back and forth. It's now, the ball is back on the side now of Grayscale's court, who has up to January the 13th to respond to the SEC's brief. But given that we've now seen this article, this gets you somewhat worried now. So we've seen this led by CoinDesk, which is obviously a sister company of Grayscale. Remember, these guys are owned by DCG, the parent company. You've had a few different issues, right, with Genesis, and a few insolvency issues because they had money lent out to Three Arrows Capital as well. So there's a lot going on right now. But one thing is for sure, if you take a look at the GBTC discount, you're sitting here at 48.57%. Now, what does that mean? That is the discount that you're getting. If you're buying a share in GBTC, you're basically buying at a 48.57% difference to the net asset value. Remember, this trust has to hold physical Bitcoin, okay? They hold the Bitcoin, and then you buy a share of this trust. And the reason this was set up back in 2013 was to make it easy for companies to get invested in Bitcoin very early on without having to hold the crypto and their coin. So they were the first trust to be reporting to the SEC that it was trading publicly on OTC desks that allowed companies to have some exposure to Bitcoin very early on. So you could hold Bitcoin on your balance sheet through holding GBTC. Now, this discount has been getting bigger and bigger, which is allowing some people to see that there's an opportunity to, instead of buying Bitcoin, buy GBTC. But now you've got to remember, part of the issue is if there is no spot ETF redeemability, this causes the problem. A lot of people who are holding GBTC are waiting to be converted into a spot ETF. That was always the plan over the many years. The assumption was that the SEC would approve the spot ETF, and then the trust would convert into an ETF, and then you could redeem. And that's part of the problem right now, is if we take a look here, it says this exact same thing. Crucially, shares in the fund cannot be redeemed, forcing sellers to part with their holdings at a discount, okay? Now, this is part of the concerns now. So if you come back up here, what they're trying to do is explore how to return up to 20% of the trust capital to shareholders if it cannot turn the product into an exchange. So maybe running some sort of a tender process is what they're thinking. But this is early days, but this could be a big problem. This changes the whole strategy for Grayscale and their Bitcoin trust, because if they cannot convert to an ETF at the end of the day, and they don't have any guidance of when, how many years is it going to take, then they got to change their model, right? They may need to pivot and come up with something else. And that's a bit of a concern. So definitely a tough time for DCG. They've got the issues over at Genesis. They've got the issues now with GBTC, and this will start to cause some concern. Now, wider markets, we can see that we're sitting at 29 here on the Fear and Greed Index. You're seeing that markets are opening up a little bit tentative here to start the week. You see pre-market moving a little bit on traditional finance, 0.43% on the NASDAQ, S&P 0.3%, and pretty flat on the Dow. You can see Bitcoin's having a completely flat, dead day today, opening up here completely flat as the European markets open up. Maybe this will change as the US markets open later today, sitting just shy of 17,000. But now we need to be worried. Remember, we were in this rising wedge. We got a fake out to the upside during the FOMC meeting. Now remember, this pattern 2/3 of the time will break to the downside. It's a bearish continuation pattern. And the technical price targets would be at the pivot point. So you look to the left and you see the pivot point. Now, if you don't know what I'm talking about, guys, if you don't know what rising wedges, if you don't know what falling wedges, if you don't know these technical aspects, ijaz.uk/TA, a completely free TA course. Guys, I don't know what else to say to you. It's completely free. Go take advantage of it. Learn head and shoulders pattern, inverse cup and head and shoulders pattern. Nobody is teaching you this for free. These courses cost thousands and tens of thousands of dollars. So take advantage of it. I won't make it free forever, guys, because I know what human nature is like. If something is free, you don't place value in it. And that's why I was humming and hawing whether to make it available, but I put it out there for you for free because I know a new crypto trader is born every single day. And this is the minimum data you need. So work for it, learn the TA before the next bull market comes. Really important. So technical price target here, you look to the left, and I'm looking at 16,240 as our next pivot point here. Thereafter, you then start bringing in 15,500. So we're not out of the neck of the woods here right now, okay? So we are still in a bearish situation here. If I bring out our daily EMA ribbon as well, you can see we are getting this downward pressure from our EMA ribbon. We are getting pushed. We tried to fake out. This would be great if we got the close there on that FOMC day, but we were thrown straight back down to the downside, and now the EMA ribbon has rejected us again. Remember, the last time we were rejected here was when we initially fell from the FTX woes. Before then, you can see how long the EMA ribbon has been acting as resistance, keeping us subdued to the downside. So this is quite worrying here on the daily chart. If I zoom out just to kind of get a broader picture on the weekly, you really start to see how much of a precarious spot we are in here on Bitcoin, because the reality of where we're at right now, we are very extended away from our EMA ribbon. We had a big move to the downside. Let's just take a look at this here. Big extended move to the downside, right? Once we lost the 44,000 mark, we then managed to try to get close to our EMA ribbon, send back down, try to go close, send back down, tried a really good effort here, thrown back down by FTX. And now, if you look at it, we've had like almost a feeble effort to even come up to our EMA ribbon. So, you know, this is a really tough point right now. We are getting rejected. We're below our 200 moving average here. If I even bring out the 200 simple moving average, you can see we're below that. If I bring out even the 300 moving average, we're getting rejected by that as well. And you know, I know you guys are sitting there wanting good news, and I can't give you any good news. I literally cannot give you any good news about this market right now. And I don't want to lie to you. I can't just sit here and say everything is going to be all right. Just wait to the first quarter. Other YouTube channels can do that. They can send you to the moon. That's absolutely fine. You can go watch those channels. You can see people driving around in different cars and sending you a certain lifestyle. That's not what we do on this channel. Okay, so I posted a video yesterday on 5 side hustles you should be looking at if you do not have any cash to buy the dip. Because right now, what's going to make people successful in crypto versus those who are not is the access to capital. This is nothing new. Okay, this is nothing new. If you go into traditional markets, not even crypto, if you go into traditional markets and found out who the best investors were, they were the people that had money to allocate during recessions, economic cycles, boom and bust, boom and bust, boom and bust. Those who have access to capital in a recession buy all the real estate cheap, buy all the shares of companies cheap, buy gold cheap, buy silver cheap, buy all the resources, buy oil cheap. And it's the same for crypto markets. If you have capital and everybody else has capitulated, and you have the right mindset, you've managed your psychology, you've got good conviction, you're going to be able to exploit this bear market. You're going to be able to, you know, without emotion, every week, dollar cost average, dollar cost average, dollar cost average. And when the next bull market comes, because you've completely forgotten about the fund you've put away, because it's excess capital, and Bitcoin is soaring to 100,000, 150, that's where you're going to do the differential. But the work is done now. The digging is done now. Right? This is not a case that you're going to sit, do nothing now, and suddenly be able to take advantage of the bull market in a year, 18 months from now. That's just not how it works. So you've got to have access to capital to be able to sit here, look at this chart and say, you know what? We're in a cycle here where we're super here retraced. And I know that, and I've got conviction, and I'm buying now at a price far cheaper than January 2018, December 2017 pricing, right? I've come into crypto, let's say 5 years late, but I'm buying crypto at a cheaper price than 5 years ago. That is insane. Where do you get to do that? Do you get to buy Tesla at a price that is 5 years ago when Tesla has made so much progress? Same for Bitcoin. It's made so much progress, so much more adoption. It's definitely not the same proposition now than it was here in December 17. There is a lot of progress being made, whether it's companies adopting it, whether it's countries adopting it, whether it is just getting more people onto exchanges, understanding how to take custody of their crypto, the hash rate, everything is improving, and that's a good sign, right? Over the long run of why we have conviction in this. But all of this is irrelevant. If you don't have cash on the sidelines to invest, then you're not going to be in a position. You can have conviction in Bitcoin. You can sit here and go, I wish I could buy, but you don't have a penny. You've got to figure out in these bear markets, how do I get extra disposable income on top of what I need to sustain my family to then dollar cost average, right? Not financial advice, but that is the game plan. That is what time and time again, the wealthy have managed to do. Whether it's in different asset classes is not the point. Whether they've done it in real estate, whether they've done it in stocks, you're choosing to look at crypto. Right? But the methodology is the same. Buy when others are fearful. When you're sitting in this fear and greed index, and we're still in fear. I know it feels a lot, for some, because it's sitting at 29 now, it's a lot higher than what it was down at 8, 9. Right? Soon this will be in the yellows, then the greens, and it's going to be very difficult to buy then because Bitcoin will be at 40,000. It'll be at 50,000. It'll be at 60,000. And you're going to be sitting there wishing you figured out more, wishing that you managed to get more income so that you can build up a bigger position. And that's the game right now. That's the playing field, is who can get cash, who can allocate it, who can control their emotions, hold on to their coins, and navigate till the next bull market. Hope you guys enjoyed this video. If you do appreciate this type of content, smash up likes and subscribe. If you're looking at some crypto-related ways of building extra income, consider checking out this video here. Smash up likes, check out the link in the description to the TA course. Please take advantage of that. It will not be free forever. And I'll see you in the next one.